Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. In the second video today, guys, let's take a look at the gold market finally. So we haven't updated it for a few sessions. Well, gold market right now looks weak, and it shows a bit different action compared to the forex market. So it sometimes it's not really a good sign. So it means that maybe somewhere you have missed some important things, because usually it's both of them as the some currencies, as euro currencies, the gold market, so all dollar rivals. So they trade in relation to the United States dollar. That mostly they're coming in the same direction, maybe in a different scale, different speed, but usual direction coincides among the major currencies against the dollar and gold market. But currently we see a bit different action. So if in today's video on the euro currency we suggest that probably market is preparing for upward breakout, on the gold market we see a bit different story. So even yesterday's price action is a bit different compared to euro currency. But sometimes this happens just because the gold market is kind of the pure asset. This is absolute asset, and mostly it shows reaction on inflation. And recent non-farm payrolls data shows that inflation in the United States is taking the speed. So as you know, the wages growth has shown the faster increasing compared to what have been expected. But in the euro currency, it has some domestic additional inputs in the political situation, economical situation that could give some more driving factors for a currency, and that's why the price behavior could be a bit different. So on the daily chart of the gold, what we see after reaction on this is forming the same harmonic swing to the upside. Last week we mostly were focused on this high wave pattern, and we said that further direction will depend on the direction of the breakout of the range of the high wave. That's why, guys, I like the high wave patterns, and they were useful in a moment where market, for example, stands at some resistance in some important point, and you need to estimate the direction, you need to estimate the validity of the possible breakout or something of that sort. And it could be very helpful tool, this high wave pattern. Right now you can see that market has dropped below its lows, and actually yesterday's close was already below the lows of the high wave pattern. It means that some advantage stands on the side of the bears, and that market could proceed action lower. Our next target on the daily chart stands around 1262. This is XOP of our major A, B, C top pattern. OP has been met. Minor reaction, it's XOP target. But first, on the way down, we think that market could spend some time around 1275 as well, because this will be the unfilled gap, and this will be daily resolved. So that's why I think that the destination point in the nearest future probably will be this one. Second moment on the daily chart, this should become worrying factor for the bulls, is the price action against the MACD direction. So take a look that MACD shows the bullish trend, but price action is not, and showing a downward action. It's very often leads to breakout and taking out of these lows. So the things that I see on the daily chart doesn't encourage me to take the long position on the gold market. So as a result, on the 4-hour time frame chart we could get the following picture. So if you remember, previously we have talked about it. We have the ABCD pattern with the same 1262 target, and recent times the downside leg usually stands to 1618 of the retracement. If it was suggest that this will be completed again, so you can see the 1618 also will be approximately 1265, 1263, approximately the same area, and that could lead to a pairing of the butterfly here. Our suggestion that probably market will need some additional driving factor to put it above 1305 has been confirmed. So indeed, as you can see, market has made the 3 times challenge of this resistance, previous lows, but it has failed and turned down. So market wasn't able to return back in the range of this consolidation and wasn't able to open road right to the 1330 and turns down right now. So it means that chance on the possible downward continuation currently stands stronger. So still one alternative scenario exists that you could keep an eye on. So it could be formed on the hourly chart, and this scenario is also kind of the butterfly, but a bit different pattern could be formed. So take a look what potentially could be. Until market keeps well at these lows and stands above them, potentially kind of the guardrails triple to buy could be formed. So currently, as you can see, market has completed AB equals CD action and now it's calling around. It's also weekly pivot point stance. Potentially it could form even 1618. This will keep market inside the AB swing and will be able to trigger upward action. But this deeper market will move down closer to the A point, as less chance will remain on upward reversal. Because guys, from the technical point of view, first of all, take a look. This red line is the lows of the high wave, on the daily high wave patterns. And take a look. This was support. So I can break it down, retested, and turns down. And it's right now entering in this previous consolidation that was broken up. So the returning back in this consolidation will open road right to the A point. And taking an overall context that we have on the daily chart as well, the good numbers, well, that increased chance on the further downward continuation. That's why, guys, currently I'm not really very fascinating with this possible guardrails triple to buy or something of that sort. Situation looks a bit more bearish rather than bullish. But if this scenario will be formed, we will get kind of the ABCD pattern. So if we'll start right from here, this will be approximately 1315. But if market will form 1618, this ABCD down, this probably will be somewhere right here. And so in this case, 1310 target will be right in the confluence resistance. But currently, guys, situation looks bearish, and personally, I do not want to take the long position on the gold market.